Welcome back to the Case IQ Compliance Monitoring Academy. In this module, we'll take a deeper look at how Case IQ's compliance monitoring tool applies rules-based scoring and artificial intelligence to detect risk across every transaction, every day. The power of Case IQ's compliance monitoring platform lies in its ability to apply data, analytics, and AI to 100% of your transactions in real time. This isn't about sampling or waiting months for audit results. It's about identifying risk as soon as it happens. For travel and expense, or T&E, that means every expense your employee incurs, whether it's an expense with a customer or government official that could evidence a kickback or bribery, or an otherwise generic expense for something like a hotel. That could be a cover for fraud or embezzlement. For your vendor payment, or procure to pay, or P2P transactions, that means all payments to vendors, consultants, and service providers anywhere, which could raise issues of asset misappropriation, conflicts of interest, bribery, fraud, or sanctions violations. For your transactions with customers, or order to cash, or O2C processes, that means all customer revenue transactions, including with distributors. These could raise issues around revenue recognition or channel stuffing, where someone is selling products near a reporting window close to inflate your revenue numbers, only to be followed by quick returns after the reporting window closes. This could also mean pricing or margin discrepancies with distributors that might indicate using them as a conduit for bribery or corruption. The first layer of detection is rules-based aggregated scoring. Aggregation is critical because you don't want to chase one risk indicator at a time. For example, every offshore payment might trigger a flag, yet at the same time, you may also end up with many false positives. What's truly interesting is when multiple signals converge, for example, an offshore payment may be a round dollar amount, is posted to an unusual general ledger account, becomes expedited, and is processed without a purchase order. When these factors combine, the risk score rises, helping you focus on the transactions that are most likely to be problematic. Aggregation also helps you better manage your workload so you are not inundated with chasing alerts. Case IQ's analytics framework includes more than 24 sophisticated rules across each of our key compliance domains. For travel and expense, you'll catch things like duplicate submissions, luxury or out-of-policy purchases, and missing receipts before they become a problem. With procure to pay, you'll spot things like split invoices, payments to high-risk offshore accounts, and unusually fast vendor payments. And with order to cash, you'll be able to flag things like unusual distributor discounts, large amounts of free goods, or sudden spikes in end-of-quarter sales. Our pre-built analytics library provides a comprehensive toolset to identify risk across your entire financial ecosystem. You can also create custom rules that reflect your organization's unique risk profile or issues you have previously seen in investigations or audits. For example, if an investigation uncovers manual payments to vendors from a specific country with bank accounts in another country from a certain general ledger account, you can configure a targeted rule to look for that specific combination of factors automatically. Rules can be applied at the subject, item, or aggregate level, making them highly flexible. And all of our KRIs and rule builders can all be managed by you through an interface, with no need for specialized data science, programming, or other technical skills. That is truly a game changer for risk professionals. Now let's add the power of AI. Our system uses anomaly detection to find risks that even complex rules might miss. Unlike traditional statistical methods that look for outliers on a single variable, AI looks at patterns across multiple dimensions: vendor, timing, amount, geography, and more. It can detect subtle signals that indicate emerging or previously unseen risks. We can also scan receipts for things like expense reports to look for keywords, as well as use large language models to detect things like alcohol, where not permitted, for example, in meals with government officials. The second layer of Case IQ's scoring engine is AI confidence or risk learning. This layer uses machine learning to evaluate each transaction and detect unknown or evolving risk patterns across multiple dimensions in a way that a rules-based scoring method cannot. It learns from your prior monitoring results and improves over time to become more predictive to show you transactions that you might find worth investigating further. When the rules-based score and AI confidence score are viewed together, powerful insights emerge. For example, a low rules score but high AI confidence may indicate that your existing rules haven't yet caught up with a new type of risk. A high rules score but low AI confidence could mean a rule has gone stale and is generating false positives. Compliance monitoring isn't about replacing human judgment. It's about giving compliance and audit professionals better tools. By combining rules-based scoring with AI learning, Case IQ creates a layered system that gets smarter over time, helping teams detect both the obvious and the unexpected. That's the power of having a rules plus AI co-pilot for your compliance program. In the next module, we'll explore how implementation of this risk scoring practically happens with the Case IQ compliance monitoring tool. Thanks for watching.